Hi, welcome to the Market Week in Review for the week ending 8th of May 2026. My name is Alex Cusley. I'm a portfolio manager based out of Sydney. And there's a couple of things to go through this week. The first is it's been a pretty positive week for risk. So equity markets are up globally. And there's a couple of drivers for that. I think the first is the earnings season in the US has continued to be very strong. We're running close to double what initial expectations had been. Tech is driving part of that, but the story is quite broad. So small cap earnings, mid cap earnings have been better than expected, along with large cap. The AI capex thematic has continued. We've seen a pretty big uplift in capital expenditure intentions for 2026 through this earnings season. And we've seen countries like Korea. Korea has had a very strong week and has continued that strong run on the back of demand for memory and chips. On our sentiment measures, so the cycle we've been talking about, we think, is going from resilient to re-acceleration. And that's still the case in the United States. The rest of the world has a little bit of a headwind with higher oil prices, but we still think is probably in that resilient camp. Our sentiment measures were slightly oversold at the end of March and have come back to very modestly overbought. So sentiment is not yet an overhang for markets. We've seen a little bit of overbought indicators, but nowhere near the extremes that we would normally see to suggest that risks have built aggressively. The final bit that I think is worth noting is in rate space. So we've seen some reprieve in interest rates over the last week, especially around the reduction in the Middle East tensions, at least for now. The other angle of interest rates that's quite interesting, especially for someone living in Australia, is we had the Reserve Bank of Australia meet. They've been a little bit out of cycle with the rest of the world. We've seen them raise rates twice up until now, and they raised rates for the third time this year at their May meeting. They're worried about inflation having picked up before the Middle East. Australia is in a very low productivity environment right now, and so we have a bit of a handbrake in terms of how fast the economy can grow before inflation starts to pick up. The language around the statement was probably a little bit less hawkish than people had worried about. And so when we're looking ahead, we still think that Australian government bonds offer quite a bit of embedded value. They're trading close to 5%. That's quite a premium above the US 10-year and above our estimated fair value. And so we think it's a pretty good opportunity still, along with just government bonds in general. We think offer better value than they did 2 or 3 months ago and should offer some diversification benefits should we see some volatility pick up around the growth environment. So yeah, that's the main story. We've seen an easing of the Middle East tensions. Earnings have been very strong, especially in the United States. That AI thematic has continued through the week. And in Australia, we had the RBA hike rates. Bit less hawkish in terms of forward-looking guidance from them. And we think the Australian government bonds still look pretty attractive on valuation. Thanks for listening and look forward to speaking to you next time.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.